All right, let's dive in. We're about to pull back the curtain on a quiet revolution that is completely changing the high-stakes game of investing. It's a story about hidden data, incredibly powerful technology, and this relentless, almost obsessive quest for a financial edge. So check this out. It all kicks off with something that sounds, well, kind of crazy. Right now, as you're watching this, financial firms are keeping tabs on nearly every single delivery truck crisscrossing the country. How is that even possible? And, the bigger question is, why on earth are they doing it? Well, there's this company called Genlogs. What they do is they put cameras on just about everything, streetlights, warehouses, you name it. And they've built this massive network to watch commercial trucks. Now, for investors, this data is pure gold. It's a live, real-time pulse of the economy. You see a ton of trucks heading to Walmart, that tells you something about how much people are buying. You see a bunch of JB Hunt's trucks just sitting around, that's another huge signal. This right here is what investing looks like now. But here's the thing, tracking trucks is really just the tip of the iceberg. It's just one piece of a much, much bigger trend called alternative data. So let's break down what that actually means. Okay, so the official term is alternative data, and it's basically any unconventional information that can give an investor an edge. Stuff that you're not going to find in a boring company press release or some government report. You should think of it as the raw, unfiltered data of our entire economy, and it's become the new frontier for anyone trying to get ahead of the market. And this slide really highlights the massive shift. For decades, investors were stuck with the old way, relying on these slow, backward-looking reports that were pretty much out of date the second they were published. The new way? It's all about instant intelligence. Forget waiting for an earnings call. Investors are literally using satellite pictures to count cars in Target parking lots, or they're analyzing our credit card swipes to predict sales figures weeks before a company ever announces them. And listen, this is not some small niche strategy anymore, not by a long shot. Get this. A staggering 2/3 of institutional investors are now using alternative data. But what's really mind-blowing? That number has doubled in just the last 2 years. This has gone from a secret weapon to basically standard practice on Wall Street. So if this is the new standard, who are the power brokers here? Who are the ones that are mastering this new universe of information? Well, at the very top, you've got the true titans of tech and trade. Right at the heart of this data-driven world is a firm called Citadel, the financial empire run by billionaire Ken Griffin. More than maybe anyone else, Citadel is the perfect picture of a modern Wall Street powerhouse. It's like this two-headed beast, a massive hedge fund on one side and a market-making machine, the part that actually executes a huge number of trades, on the other. And both sides are fueled by this insatiable hunger for data and the tech to processing. To really wrap your head around the scale we're talking about, just look at the numbers. Their market-making division, Citadel Securities, handles 1 out of every 4 stock trades in the entire U.S. market, 25%. Think about that. Every 4th trade is flowing through their systems. And all that trading data gets pumped into a computing system with access to 100 petabytes of data. What does that even mean? It's more information than you'd find in the entire collection of the Library of Congress. Just let that sink in for a second. And how do you make sense of all that? Well, they employ over 260 PhDs. We're talking physicists, mathematicians, and their entire job is to turn that ocean of data into profitable trades, spotting tiny patterns that no human ever could. So you see what Citadel is doing, and that kind of success, it sets the standard for everyone else. It's fueled this fierce industry-wide competition. We are now in a full-blown data arms race. And you can see it in the money being spent. It's staggering. This year alone, investment firms are going to spend over $3 billion just to buy these data sets. And by 2030, that number is projected to explode to nearly $9 billion. It's a massive, and I mean massive, and rapidly growing market. It's just like this one analyst put it. It's a technology arms race. It makes sense, right? When everyone has access to the same public information, the only way to get that edge, the only way to find those better returns, is to find data that nobody else has. So what are these data hunters actually chasing? Pretty much everything. They're buying our credit card transaction data to see what we're buying. They're analyzing satellite photos of parking lots. They're tracking web traffic on Amazon, monitoring our foot traffic into actual stores, scraping social media feeds from Reddit and X, even watching the blockchain. Basically, if you can measure it, you can bet someone is trying to sell it. Okay, so this brings us to the final and maybe the most important part of all this. What does it all mean? What are the consequences for the markets and, yeah, for us? You see, there's this huge fundamental debate at the very heart of this revolution. The people who support it, they argue that more data makes markets more efficient, that prices reflect reality faster and more accurately. But is that what's really happening? Well, it's a question that even the experts at the very top of the field don't really have an answer for. As Vanguard's Cesar Orozco points out, this absolute flood of data certainly hasn't stopped crazy speculative bubbles or the rise of meme stocks. More information, it turns out, hasn't necessarily led to more rational markets. And beyond all the theories about market efficiency, there is a profound and much more personal question. This constant, voracious appetite for information, our transactions, our movements, our online chatter, it has enormous implications for our privacy. So this is the question we're all left with. We now live in a world where almost every part of our economic lives can be monitored, packaged up, and sold to the highest bidder, all for a tiny financial edge. From the trucks on the highway to the private jets of CEOs, this data arms race is undeniably changing the world of investing. But it's also forcing us all to ask, at what cost? And where exactly do we draw the line?